Assalamualaikum warahmatullahi taala wabarakatuh. This is the second video for the internal control system. Okay, in this video, I'm going to cover the importance of internal control to auditor, the review and documentation of internal control system by auditor, internal control tasks in transaction cycle, the implication of the strength and the weaknesses of internal control to the auditor audit testing. The first two subtopics here I have covered in my first video. Auditor has a responsibility towards the internal controls that have been implemented by the management. This is actually part of the auditor's responsibility. Not only that the auditor has to perform tests on the financial statements, but the auditor has to also examine the internal controls. The reason is because the weaknesses or the strength of the internal controls that are implemented by the management of the company may indicate the extent of the audit procedure that the auditor is going to carry out on the financial statements. So you see that the internal control examination is actually part of the auditor's responsibility. So with regard to this, the auditor has to assess and evaluate the client's internal control to determine how strong or how weak the internal controls are. If the auditor discovered that there are weaknesses on certain policies and procedures, the auditor has to bring this to the attention of the management so that the management can improve on this. And formally, the auditor is going to prepare a report which we say management report. So in this report, it will include all weaknesses of internal controls that auditor has identified, and also the auditor has to give a recommendation for improvement. When we say auditor has responsibility towards the client's internal control, it means that the auditor has to understand the internal controls, to assess them, and to test for their effectiveness. And the result from this test would lead auditor to understand how adequate, how effective, and the quality of the client's internal control. Also, the auditor has to determine the risks associated with weak internal controls. Yeah? And these two can be used by auditor to determine what audit procedures that they are going to carry out when performing tests on the financial statements. Okay, the diagram here shows the procedure that the auditor has to go through in order to obtain understanding about the client's internal control. So first of all, the auditor has to get information about the internal controls that exist within the client's organization, to look at the design and how this internal control operates. And then the auditor assess, and this is actually by performing the test of control. So the results from this test of control will enable auditor to evaluate how effective and how adequate the internal controls of the client. And based on that, the auditor is going to decide the audit procedure that auditor is going to carry out on the financial statements. Okay, when auditor assesses clients' internal controls, this is usually assessing the risk associated with the internal controls. The auditor has to determine whether the internal controls he has assessed can be supported by his understanding obtained previously. Importantly, auditor would like to know or to determine whether low risk of internal control can be supported. Okay, if this is not supported, then the auditor has to determine the appropriate assess control risk. In assessing the internal controls, the auditor will carry out tests of internal controls, and this is where we say tests of control. Altogether, there are 4 tests that can be performed by auditor. The first one is inquiry. Uh, Inquiry is where the auditor will ask the client personnel or even the management about the internal controls, policies, and procedure. Next, the auditor can examine the documents, the records, and reports that relates to the internal controls. For example, documented rules, policies, and procedures. The auditor can also observe how the control activities are being applied by the personnel. And lastly, the auditor can re-perform the client's procedures. For example, like the auditor is going to check whether the transactions are recorded in the proper books of account, and then after that they are being transferred or posted to ledger and so on. In assessing and performing the test of control, the auditor has to record what he has gathered about the internal controls, and in audit, this is known as documenting understanding on internal controls. There are 3 methods or 3 ways of documenting internal control. The first is narrative, flowchart. Second, third is the internal control questionnaires. Narrative is actually a method where auditor write notes about the internal controls that he has observed. Preferably, this is used when the internal controls are very straightforward and simple. If it is complicated, then narrative is not going to be suitable. Okay, flowchart is a method where auditor capture his understanding through a uh, diagrammatic flows of internal control. And this is where the auditor will show or document the relationship of internal controls from one department or unit to another department or to another unit. Okay, this is a method which is preferred if the internal controls are comprehensive, is complicated. The third one is the questionnaire. This is where the auditor prepare the questionnaire to ask about internal controls of certain unit, department, or division to certain staff within the organization. Okay, the questionnaire is actually to get more information which cannot be captured through narrative and flowchart. Internal control questionnaires are prepared by auditor, and this method is actually not that easy because the way the questionnaire has to be drafted is that it's easier for the staff to respond to the items in the questionnaire. And usually the auditor will phrase the question in the questionnaire where the respondent may only reply or answer either a yes or no. So these are the 3 methods of documenting understanding. The main reason the auditor performs tests of control is to identify whether the key controls are absent within certain unit, certain department, certain division, or for certain business operation. It is also performed to determine whether there are other internal controls that can support or can be used to compensate the absence of the key internal controls. Another reason for auditor to perform tests of control is that uh, when there are absence of key internal controls, there might be possibility of material misstatement, which could result in the financial statements. Through tests of controls, the auditor would be able to identify areas where there are weak internal controls and areas where internal controls are strong. So for the areas where auditor found internal controls are weak, the auditor will have to report this to the management through management letter. Management letter is actually a formal letter to communicate about the weaknesses of the internal control, and also in that letter the auditor will have to include recommendations which can be considered by the management for improvement. Let's look at the implication on the strength and weaknesses of internal controls. Auditor is very much interested about this, about the strength and the weaknesses of the internal controls, especially in relation to the transaction, to the records, to the documents, because these are the information that will be used to prepare the financial statements. If the internal controls are good and strong, it means that the information recorded would be properly done, and ultimately financial statements show a true and fair view. On the other hand, if internal controls are weak, or poor or non-existent, it might mean that there might be some transactions that are not recorded because might be missing, or are not recorded promptly and timely, or it could be that some of the transactions are recorded in wrong journal, posted to wrong ledger, and hence the ultimate financial statement may not be a true and fair uh, based on the economic transaction. So as a result, if the internal control systems are weak, poor, or non-existent, it means that the auditor has to carry out extensive audit procedure on the financial statements. Well, if internal control systems are strong and good, the auditor can limit the audit test on the financial statement. That's the end of the second part. Thank you. Assalamualaikum.